afternoon. Well, I'm going to take a bit of a step back here because we had the rand initially weaken against the dollar on Friday, and that following disappointing US retail sales data. Most in South Africa certainly not paying much attention to that data with the World Cup kicking off in Johannesburg. So let's unpack what exactly came to the fore there.
Hi, Alishia. I think what we've seen over the last few days certainly is the focus on Europe has really intensified trade, and one has to discount a little bit about what's happening as far as the World Cup is concerned, creating very thin markets in South Africa. What has happened is that the market was really short of euros. We've had a little bit of surprising data come out of China, which kind of underpinned the developments as far as the global economy is concerned. And we've seen some of the risk aversion dissipate. And as the euro has climbed up to again above the 122.5 level, that's dragged equity markets with it. And we have seen a sharply stronger rand certainly today.
Certainly at this stage, people are hoping that consumers are going, US consumers, let's highlight that, are going to join the party with latest figures pretty mixed. I mean, we had the retail sales data disappointing, but then a consumer sentiment data managing to ignite some positivity. What's it spelt as far as outlook in the recovery of the world's biggest economy is concerned in your books?
Well, I think we've got this battle now, Alishia, between the debt concerns and the global economy that looks fairly robust, looks like it's continuing its resumption to growth. Of course, we can only become confident about that picture when jobs are starting to be created and to alleviate the massive unemployment that has taken place across the world as a result of the 2008-2009 debt crisis. I don't think we're out of the woods by a long shot yet. Focus is about to be shifted onto Spanish banks and their state of health. And in fact, whether that could drag us into a second round of the crisis. So I think there's still a lot of difficulty to come. The current sort of bullishness that is underpinning the market, I think, is about a short covering. And we'll have to watch data coming out in the not too distant future.
So as far as all of that is concerned, then what trading range have you pegged out for the short term? Because today, I mean, we're largely riding on the back of dollar weakness here. And many say this rally on the euro is in fact going to be a short-lived one.
I'm firmly in that camp, Alishia. I think, as I said, the euro bullishness is about of short covering. I think the rand is really a difficult picture at the moment because the market is extremely thin, not a lot going on because of the World Cup. A lot of trading desks are at half strength or quarter strength as guys have taken a lot of leave. Of course, we've got a public holiday on Wednesday in South Africa. I think the rand for the moment is trapped in a 760, 780 kind of range for the medium term. I think it'll be very difficult unless we get some surprising a movement on the euro that will drive the rand beyond 760. I think the market will be a little bit reluctant to take it through that level, and I think we will see in the not too distant future a resumption of euro weakness, perhaps also causing some weakness in the equity markets and a resumption of rand weakness.
Of course, over the next month, David, the rand trading activity is expected to decline, of course, as South Africa hosts, the World Cup. But from a different perspective, we've had RMB estimate that the tournament will result in about 8.5 billion rand worth of inflows. That is a sizable figure, but is the impact on the currency set to be as great?
Yeah, I mean, it is an inflow, but it's not unexpected. One must remember, Alishia, that we've been expecting these, the foreign visitors, the numbers have actually been coming down. So anywhere between 300,000 and 400,000 visitors in South Africa would probably translate into that kind of inflow. But to a large extent, that would have been discounted already.
Yeah.
I don't think it's going to have a major impact beyond perhaps a couple of cents as far as the rand is concerned. But discounted, I think, largely in the price already.
Yeah.
We're not expecting major impact from that.
It seems after Friday's performance against Mexico, a theory that's out there is that for every goal we score, we could see some effect on the rand based on sentiment alone. Do you share that?
I think a lot of people, including myself, have been surprised by the sentiment, have been surprised by the goodwill in the country. I certainly think that a lot of the foreign press releases and coverage that we're receiving are surprising a lot of foreigners as well, and perhaps that will lead to a little bit more inflow into the country. But as far as I'm aware, tickets have been sold out, and it's going to be hard pressed to come all this way and not be able to get a ticket for the tournament. So certainly the coverage is worth a lot of goodwill and sentiment. But I think one must be a little bit careful about becoming overly optimistic because, you know, once the World Cup is over, we are going to have a little bit of a hangover as some of the pressing issues come to the fore again.
Of course, with all of this playing out, we've had two schools of thought emerge as far as interest rate direction is concerned in the country. Some saying that the central bank will cut its 6.5% benchmark lending rate when it meets on July the 22nd, and certainly some of the market showing indication of that. The rand was also supported, though, by domestic data showing that manufacturing output for April rose by 8.7%. Some saying that lessening the chances of a further rate cut this year. So with those two schools of thought out there, where do you stand, David?
As far as interest rates are concerned, I think certainly for the next two meetings at least, for the next 3 months or so, I don't think we're going to have any movement on the interest rate. We'll have to just watch the kind of pressures that come to bear on inflation. Certainly from the demand side, we've had very little inflationary pressure. What we have had is the wage increases that might have an impact on inflation, and certainly the Eskom tariff hikes have come into play now. So I think the MPC, the good governor, is going to hold off as far as interest rates are concerned at the moment. But what is more interesting for me in the second half is the currency debate is set to heat up. Certainly there's a lot of speculation and certainly a lot of noise being made about the strength of the currency and the impact that that's having on the domestic economy. And I think that's more important at this point in time as to the financial authorities' stance as far as the currency is concerned.
Well, David, before we go, a quick look at some of the activity we're seeing on the bond market side of things. Can you run us through that?
Relatively benign, but I think we're still seeing some attractive inflows. As I said, there's not a lot of pressure on the demand side as far as inflation is concerned. Our bond yields are relatively healthy compared to the rest of the world, and we've seen some inflow there. But at the same time, not expecting short-term rates to come down. So bonds really trapped in a bit of a range at the moment, and I don't see much further gain potential for them certainly in the weeks ahead.